Welcome to the deep dive. Today, you and I are going to really get into the 2024 annual report from Miniso Group Holding Limited.
hmm
We want to give you a clear picture of how this global retailer, the one with the lifestyle goods and the pop toys, how they're actually performing.
Yeah, what their strategy is, what the plan looks like going
Is
forward.
exactly the whole game plan.
And just right off the bat, it's worth mentioning, Miniso changed things up a bit. They shifted their financial year end. It used to be June 30th. Now it's December 31st.
Okay, so the report we're looking at is for the full year ending December 2024.
That's right. And helpfully, they've also given us some unaudited numbers for the full year ending December 2023, just for comparison's sake.
Good, but still need to be careful.
Yeah, just be aware, some of the comparisons they make in the report are against a 6-month period from before the change. So, not always a perfect like for like.
Got it. So our mission today.
Well, we really want to pull out the main business trends, the key financial stuff, what they're doing to create value for shareholders, and just, get a solid assessment of the business overall.
Okay, sounds good. So let's jump right in. How is Miniso actually structured? What are the main parts of the business?
Fundamentally, there are two reportable segments we need to think about. First, you've got the Miniso brand itself. That's their core lifestyle products. Think home goods, cosmetics, stationery, that kind of thing.
The stuff they're most known for.
Exactly. Then they've got the top TOY brand. This one's newer and focuses specifically on pop toys, collectibles, designer toys, a market that's really taken off.
Right. And strategy-wise, what's the big picture?
It really boils down to global expansion. They're tackling this with sort of a two-pronged approach. One is cost leadership, keeping prices affordable. The other is product differentiation.
How are they differentiating?
A big part of that is through IP design, collaborating with popular brands, characters, artists, making their products unique and desirable that way.
Okay. And I saw something about a superstore strategy. What's that about?
Yeah, that's a key initiative. They're developing these larger store formats. The idea is to really amplify what they call big beauty, big toys, and big IP.
So more space, wider selection in those specific categories?
Precisely. Maybe exclusive IP collaborations you only find there. The goal isn't just looking flashy. It's about boosting the average spend per customer and really strengthening the overall Miniso brand perception, making it more of a destination.
Makes sense. And how does this play out differently in, say, China versus overseas?
They're tailoring it. In China, they see potential in both the big Tier 1 cities and the smaller, lower-tier cities. So they're actively recruiting new partners to open Miniso stores across the board, and also, importantly, upgrading existing stores to this newer, maybe superstore-adjacent format.
And outside China?
Overseas, it's more about flexibility, adapting the model, sometimes direct operations, sometimes partners, depending on the market. They're putting a particular focus on strategic regions like North America, the rest of Asia, and Europe.
You mentioned partners. It looks like their distributor network saw some changes in 2024.
It did, yeah. The numbers shifted a bit. They started 2024 with 230 distributors and ended with 252.
So a net increase.
A net increase, right.
Right.
They added 61 new ones, but also parted ways with 39. That kind of churn happens in these models.
Mm-hmm.
But what's perhaps more telling, especially regarding that overseas strategy, is the jump in directly operated stores outside China.
Oh, yeah. How much of a jump?
It doubled, went up to 505 stores by the end of 2024.
Mm-hmm.
And the revenue from those directly run stores also doubled.
Wow. Okay, so that signals a definite shift towards more control on those international markets.
I think so, yeah. Particularly key ones.
All right, let's dig into the regional performance then. The report uses distributor sales changes. What trends are popping out there?
Well, it's a bit of a mixed bag, honestly. If you look at Asia, excluding China, they had like mid to high teens growth based on distributor sales in 2023. But in 2024, that slowed to high single digits.
Okay, what about North America? That was a focus area. Right?
Yeah, and it showed huge growth in 2023, like 70–80% increases. But then in 2024, flat. Basically no change in distributor sales year over year for the 12 months.
Huh, interesting. Latin America.
Similar story, real strong growth in 2023, like 35–40%, then cooled off to mid-single-digit growth in 2024.
And Europe.
Europe was pretty consistent in 2023, mid-teens growth in both the 6-month and 12-month periods, but again, Flat in 2024.
So a pattern seems to be emerging here. Strong 2023, then a leveling off in 2024 across several key overseas regions, at least based on distributor sales.
Exactly. And remember, these are distributor sales figures. They don't fully capture that big increase in directly operated stores we just talked about.
Good point. So what could be happening?
It could suggest that, the initial rapid expansion phase in some markets is maybe maturing. Competition ramps up. It gets harder to maintain that crazy growth rate.
And the move to more direct stores might be their response to get more control over how the brand is presented, the customer experience.
That seems plausible, yeah. Allows them to manage things more closely, maybe push specific initiatives more effectively than through distributors alone.
Okay. Now, with all this global activity, there must be risks involved. What does Miniso flag as potential roadblocks or uncertainties?
They're quite upfront about several things. First, brand strength is crucial. If Miniso or Top Toy loses appeal, that's a direct hit.
Actually.
Then there's the pricing and quality balance. They operate in a competitive space, so getting that value proposition right is key. They also mentioned their reliance on retail partners and distributors. If those partners don't perform well or run into trouble, it affects Miniso.
The downside of the partner model.
Right. And international operations just bring complexity, different rules, economies, politics. They also flag the risk of partner misconduct, which could hurt the brand's reputation.
Anything specific to China or the U.S. listing?
Yes. They mention risks related to operating in China, like potential regulatory changes. And because they're listed in the U.S., they have to mention the Holding Foreign Companies Accountable Act, the HFCAA, which carries a potential, though perhaps less immediate now, risk of delisting if certain audit requirements aren't met down the line.
Okay, quite a few things to keep an eye on. Let's shift to the financials now. What were the key numbers that stood out to you in the 2024 results?
Well, one pretty significant item is the jump in sales and distribution expenses. They went up to about RMB 3.5 billion in fiscal 2024, compared to roughly RMB 2.3 billion in the previous 12-month period. That's a big increase.
And they attribute that mostly to...
Building out those directly operated markets like the U.S.,
Yeah.
it costs money to set up and run your own stores, hire staff, marketing.
So an investment cost for future growth, essentially.
That seems to be the strategy, yes. On the flip side, their other net income also increased quite a bit. It hit RMB 114.7 million in 2024, up from RMB's 62.4 million.
What drove that?
Mainly better returns on their investments in wealth management products and some fair value gains, though they did have some offsetting losses from foreign exchange.
Okay. Any major write-offs or impairments?
Relatively small ones.
Yeah.
About RMB 8.8 million in impairment losses linked to some of those directly operated stores. Not a huge number in the grand scheme.
And the bottom line for operations? Profit?
Operating profit looked healthy. It was RMB 3.3 billion for fiscal 2024, which is up from RMB 2.8 billion in 2023. So despite the higher spending on expansion, the core business is generating more profit.
But I think I saw something about finance income decreasing.
You did, yeah. Net finance income dropped quite sharply. It was RMB 161 million in 2023, but only RMB 25.8 million in 2024.
Why the big drop?
Two main reasons cited. They had less cash sitting in bank deposits, and the interest rates they were earning on that cash were lower.
Gotcha. You mentioned wealth management products earlier. What's their general approach to cash? Are they taking big risks?
Their stated policy seems pretty conservative. They focus on low-risk, short-term things. Think term deposits, principal guaranteed investments. The idea is to earn some income on their cash pile without, gambling or tying it up so they can't fund operations or investments.
Makes sense. How about their overall financial footing? Any big spending commitments coming up?
Well, their capital commitments were actually down at the end of 2024 compared to 2023. About RMB 633 million versus RMB 837 million.
And what's that mainly for?
The report says it's mostly tied to building their new headquarters, so a planned capital project.
Okay. And one last thing on financials currency risk. They operate globally.
Yeah, that's definitely a factor. A lot of their international revenue comes in U.S. dollars, but they report in Chinese RMB. So swings in the USD RMB exchange rate can impact their reported results.
And are they hedging against that? Using derivatives or anything?
Interestingly, the report states they currently don't use derivative financial instruments for hedging, so they're exposed to those currency fluctuations.
Okay. So they're profitable, investing in growth, managing cash conservatively, but exposed to FX risk. What about returning value directly to shareholders? Dividends, buybacks?
They've been quite active on that front, actually. They have share repurchase programs authorized up to HK $2 billion worth of shares, or ADSs.
Have they actually been buying?
Yes. Just after the year end, in March 2025, they signed agreements to buy back up to about HK $1.8 billion. That's split between a Hong Kong program and a U.S. program using a specific rule,
Yeah.
10b5-1.
So a pretty concrete commitment to buybacks.
Seems like it. And then there's the dividend policy. They aim to pay out at least 50% of their annual adjusted net profit.
Adjusted means.
Non-IFRS, basically excluding share-based payment expenses.
And did they pay dividends in 2024?
They did. They paid both a special dividend and an interim one during the year, totaling, let me see, roughly USD 0.14 per ordinary share combined.
And where did that money come from? Profits?
The report specifies it came from additional paid-in capital, which is essentially part of the equity shareholders contributed, not directly from current year profits.
Interesting distinction. Any more dividends planned?
Yes, they proposed a final dividend for 2024 of about USD 0.08 per share, approved in March 2025. That's also going to be paid from additional paid-in capital.
So significant returns via both buybacks and dividends. Do they have the capacity for this?
Well, their distributable reserves were quite substantial at the end of 2024, over RMB 10 billion. So they seem to have the reserves available to cover these distributions.
Okay, wrapping things up then. Considering everything, the strategy, the financials, the risks, the shareholder returns, what's your overall assessment of Miniso moving forward?
I think Miniso is clearly in a dynamic phase.
Yeah.
They have this ambitious global strategy. They're adapting. They're investing heavily in direct operations overseas, which is a big shift. The focus on IP and the superstore concept are definitely interesting ways to try and stand out and potentially drive more revenue per customer. They know their core strengths are cost leadership and differentiating their products.
But it's not all smooth sailing.
Definitely not. It's a tough retail world out there. Competition is fierce. They absolutely face risks, keeping the brand cool, managing those hundreds of partners, navigating all the different country regulations, the China-US stuff we talked about.
Right.
And the fact that regional growth seems to have slowed in 2024, at least via distributors, suggests they really need to execute well on these new strategies, like the directly operated stores, to reignite growth in some areas.
So potential is there, but execution is key.
Absolutely. And the shareholder return actions, the buybacks, the dividends they do signal confidence from management and a commitment to investors, which is positive. But success really hinges on navigating those challenges and making these strategic bets pay off.
That provides a really clear picture, I think. We've covered their business structure, the global plans, the financials, how they're giving back to shareholders. A lot to digest from that 2024 report.
It's definitely a company in transition, balancing affordability with brand building and partnership models with direct control. Lots of moving parts for you to track.
And maybe here's something for you, the listener, to think about. Given Miniso's global push and that increasing focus on IP, those collaborations, what kind of future partnerships or maybe even new markets could really move the needle for them? How do you think they can best manage that tension between being known for low prices and pushing these sometimes more premium IP-linked products? Something to chew on. Thanks for joining us for this deep dive.